Keith Fitz-Gerald, who's the principal over at Fitz-Gerald Group and founder of One Bar Ahead. Keith, great to have you here with us today. Let's dive in. Markets opening higher on this Tuesday. What do you believe, from your perspective, is driving this optimism?
Well, first of all, they're getting rid of the Fed fatigue, the political worries, all the things that have held us back for the last few weeks, and markets are finally beginning to focus on earnings again. And it's funny because, when money gets on the move, people tend to pay attention. So I like the activity we're seeing this morning. It's positive. I think it sets up a strong fall run if it continues.
And so with regard to what we've seen so far in earnings with the companies that have already reported, notably, we're going to be looking out this week for, of course, later on today, Netflix, but we're also going to get some view into the airlines and how these companies have been broadly navigating this pandemic. We know that some of these costs across industries and sectors have been passed down to consumers. And so what do you expect will be the broader sentiment of the consumer heading into the all-important holiday shopping season as well, knowing that the prices they may be paying could be higher and the actual delivery and fulfillment could take longer than expected?
Well, I tell you, it's going to be a lot like that emoji where you go palm to the face kind of thing, because everybody knows that expenses are going up. I think there's an awful lot of frustration from the consumers. On the other hand, though, there is a silver lining. People are realizing that, hey, you know what? I can get back in the air. I can go shopping. I can see my friends again. So I think that hope, as we spoke about several months ago, is going to ultimately triumph. That's the real message here. And I also think that we're going to find out that, companies like airlines have been managing this crisis a lot better than people think, which sets up, again, more money coming into the market when investors realize that.
We like a good face palm emoji reference, Keith, so thanks so much for that. Additionally here, when we think about the Fed and how they've continued, Fed Chair Jerome Powell, over months at this point in time, has continued to call inflation transitory. However, we're continuing to see it be a little bit more sticky on the inflation front. It's come up during earnings today, and one particular company that continues to come to mind for me as we were breaking them down earlier, Procter & Gamble, a company that touches so many consumers, and within their own earnings, they said that this consumer giant also raised their forecast for commodity and freight costs for the remainder of the year, issuing a warning that the company believes inflation is still increasing. What do you expect coming out of this earnings season, where many companies, in their transparency, are going to have to cite the headwind risk of inflation? What action do you expect the Fed to take?
Well, I tell you what, I think the Fed is delusional. I think they're the only ones on the entire planet who don't understand that inflation isn't transitory, and they've been wrong from day one, which means, of course, they've already caused the next three crises, Brad. So, companies are going to do what they have to do to maintain profit margins. They're going to do what they have to do to get goods to consumers. And unfortunately, the rest of us are going to have to pay a terrible price for the Fed's avarice and hubris in some cases. It's just they've been wrong from day one on this, and they can't admit it, because to do so would be a complete policy failure, unfortunately.
We're taking a look at shares of Procter & Gamble, as we mentioned. As things have opened up here for trade, it seems that PG shares have opened up a little bit lower here, down by about 1.9% as of right now. Keith, as we go on throughout the rest of this earnings season, what most notably sectors that you would be paying closest attention to, those where you may be adding a little bit on the table, or those where you may be taking some off of the table, given that there is, coming into every earnings season, the mindset of perhaps buying the rumor or selling the news, and this is a heavy news period for many companies?
Well, it is. Heavy is certainly an understatement.
Yeah.
I'm looking at Tesla very keenly. I think that's bound for $1,000 a share. The company's about way more than cars. Facebook, to me, is problematic. We're going to get a look at legislative anger, not just earnings and data, if the whistleblowers are correct. Apple, of course, is a big one. I find it very curious and not a coincidence that JP Morgan is out saying earnings are probably going to be great, but expectations are going to disappoint. I don't agree with that. There's definitely some games afoot there. So big tech is the way to beat inflation, because they've got margin protection power. I'm also looking at defense stocks vis-a-vis China's news about hypersonic missiles over the weekend.
We got to talk about the big news of the day as well. Of course, in the first Bitcoin exchange-traded fund, of course, this is a futures exchange-traded fund, and so it is not directly holding Bitcoin, but monitoring the price action, and this perhaps one of the new measures and first measures of its kind of exposure that some investors could have access into. From your standpoint, the significance of today's listing and today's event and BITO beginning to trade.
Well, number one, I love the ticker. I think this is a huge and very significant moment in financial history, because it monetizes the ability to arbitrage risk and move in and out of something like that. However, that said, I am old enough to remember George Soros going after the Bank of England in 1992 and cementing his reputation as one of the all-time great currency speculators. So I'm a little concerned that he's in the game at this particular point in time, but longer term, it's a groundswell. It's something I own, Bitcoin and Ethereum both. Whether we go after the fund or not remains to be seen, but this is a great thing to have happen, especially now.
What does this signal in terms of the SEC's stake and not stake, but I should say their overall sentiment, if you will, on some of the other ETFs that have been put across their desk for approval, for review, and many of those not necessarily getting through? This, though, is one that doesn't necessarily touch Bitcoin. So with that in mind, have they essentially cleared the way for other ETFs of the like to potentially make their way into the public realm?
That's a sharp question. I think the answer is yes. It strikes me as a lot like the FDA, which has learned a lot from the COVID situation. I think the SEC has been behind the eight ball for a long time. This is a powerful sign to me that they are paying attention to what's going on, and they are actually listening to the world around them, and more importantly, adapting. I expect Wall Street to put up a fight if the SEC starts to come down hard, but I hope it happens because it's long overdue.
Okay, I want to talk about a few individual companies just while we have you as well. Johnson & Johnson, we didn't talk about that earlier, but reporting earnings today, the company seemed to benefit from its COVID-19 vaccine, adding over $500 million in sales. I want to get your reaction to the pharmaceutical giant's results.
Solid company, solid results, great reputation, long-term hold. Still like the company. Nothing that would cause me to run away from it. I don't own it, but nothing that would cause me to run away from it if I did.
Is there anything within the mixing and matching of vaccines that some of the regulatory bodies are evaluating right now and going through the data to suggest that, hey, the data has shown that it's actually more efficacious if you do have a mixing and matching of vaccines? With that in mind, is there any net impact to a company like J&J with that?
I'm not so sure about J&J, but clearly for Pfizer, BioNTech, Moderna, anybody would work in the mRNA space. Pfizer is, of course, my favorite. We do own that, and I've been looking to add shares all along to that. The company's about innovation. It's going to take what it's learning, and it's going to apply it to oncology, to HIV treatments, to anything else in its portfolio. So that gives the company a huge leg up 5-10 years from now. So in contrast, a lot of people are just looking at it right now. The mixing and matching is important because it means the FDA is demonstrating flexibility, but we're also learning more medically.
Keith Fitz-Gerald, principal over at Fitz-Gerald Group and founder at One Bar Ahead. Keith, appreciate the time as always and the insights and context here on the day. Everyone, we want to get you caught up on something.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.